Hi, everyone. Thank you for joining us in another FAS webinar. I'm Paulo Talarico. I'm partner of FAS in New York City, and together with my colleagues from Brazilian Corps, Brazilian Consular Corp, CMC, and BTN partners, we'll discuss M&A investment opportunities in Brazil. If you have any questions, please send me through the inbox, and if you still got time at the end of the talking, we will answer you, or we'll send a reply by email as soon as possible. Today, unfortunately, the Consul Elise will not be able to join us. She had an unforeseen issue, and in her place, we'll count on the presence of Marcio Franceschini at the last part of our talking. And to no much ado, I will call Luis Fernando Cardoso de Almeida, Brazilian Vice Consul in New York City. Please, Luis.
Well, hello everybody, and thank you, Paulo, for the very warm welcome. Paulo is a very dear friend of mine. We know each other for 30 years now. We went to law school together, and it's a pleasure to having him as a partner of FAS Advogados, FAS lawyers in New York. Well, I'll just make quick remarks on investments in Brazil. As you all may know, Brazil undergoes now a difficult political situation, which is hindering the Congress from passing laws, but that's just not a permanent situation. And also, if you take the history of Brazil for the last 30 or 40 years, we've had presidents from the left wing, from the right wing, more centrist, but all of the presidents and all of the governments in Brazil, they have always valued foreign investors and foreign investments in order to increase jobs and bring resources to Brazil. Well, Brazil is a huge player in the commodities area, and with the end of COVID, we believe that most of the companies in the world, they will be buyers of Brazil products. And also Brazil has a very big, a huge internal market. So most of the companies listed in the SP 500 already have branches in Brazil. And we believe that there is yet space for more companies to come. And we are going to have elections next year. It's pretty not defined up to this moment who is going to win. But anyway, if it's going to be the left candidate, the right candidate, or a third way, as we say in Brazil, all of them have in their projects intentions to foster investment and to be open to foreign money. So one other very good thing about Brazil, and I can say that as a diplomat, is that most of our government is not appointed by politicians. I can say that about Itamaraty, which is Brazil Foreign Service. All of our employees, we are state employees. So the fact that we are not appointed by politicians, unlike America, for instance, where most of investors are appointed by the president. In Brazil, we are professionals, so we can have this continuity in our investment, promotion. So Brazil is a great opportunity. We have a really very good installed industrial capacity. We have qualified workers to industry, to commerce, services, not to say agriculture, which are we are probably the leaders in the world. So I welcome everybody to invest in Brazil. And of course, the Department of State, the Foreign Relations Ministry in which I work, we are available. We are present in more than 130 countries around the world and in more than 220 cities. And we are always available to have meetings and to give information to investors. And if you want to contact me or one of my colleagues in any country of the world, you can call my friend Talarico, Paulo Talarico, and he will have all the information. So thank you very much for your time and your attention. Here in New York, as you all know, the vaccination is a little forward. So life is almost back to normal. And I have 2 more meetings this morning. So unfortunately, I will not be able to join you till the end of your meeting, but it was a big pleasure for me to be able to speaking to you. So thank you very much.
Thank you, Luis, for your participation. And now I call Ted Rhodes of CMS London, partner of CMS, to give us his words.
Good morning or afternoon, everybody. It's a great pleasure to be here at this event today with our friends from FAS Advogados and my fellow speakers. As Paulo mentioned, I'm a partner with CMS. I'm the managing partner of our office in Rio de Janeiro, Brazil, where I've been based for the last 12 years. CMS is a global legal organization, the largest in Europe, but also with important operations in Latin America, Africa, Middle East, and Asia Pacific. And so I've been asked today to talk a little bit about the interest we're seeing from our clients in Brazil and some of the trends we're seeing in inbound M&A. And so why M&A? Because all of us here in Brazil at the moment are seeing lots of it again. European appetite for Brazil was noticeably impacted by the fallout from the Lava Jato scandal and some of Brazil's economic difficulties around the middle of last decade. But actually, inbound investment has been returning for a few years now. Investment conditions have been improving as we've seen interest rates come down significantly. The Brazilian real now is at near historic lows against the dollar and the pound and other major currencies, which makes Brazilian assets attractive. And the government, the last 2 governments have launched concerted efforts to improve the business environment and reduce bureaucracy. More recently, of course, COVID-19 has raised its ugly head. And so first half of last year, we definitely saw a dip in M&A activity as investors and financiers took a little time to assess the scale of the disruption and adapt to lockdowns and remote working. But that downturn was pretty short-lived. It seems most deals were deferred by a few months rather than abandoned. And that same disruption is now creating opportunities. I think it created both winners and losers, which has prompted consolidation in a number of industries as the winners take advantage of their position to increase market share. We're seeing a scramble as well for new technologies and businesses that are perhaps better adapted to this new normal, far more online presence, for example. I think in Brazil, as in many countries, there have been government support mechanisms which so far have protected companies from the worst of this disruption. So personally, I don't feel like we've seen a big wave of truly distressed M&A yet, but that may actually add impetus to the market in the months ahead as those stimulus measures are withdrawn. On the buy side, we're also seeing an abundance of capital. Investors are frustrated with very low interest rates across most of the developed economies. And so they're looking for higher returns in emerging markets. Commodities have been performing very strongly. So this really plays to Brazil's strengths. And those conditions are very similar to what we saw in the last Brazilian boom in the wake of the global financial crisis around the start of the last decade. So I was asked particularly about inbound investment from Europe. The EU is the leading source of foreign direct investment into Brazil. And Brazil is or was the EU's third biggest recipient of FDI after the US and Switzerland. Those figures may be a little bit out of date because they precede Brexit. But Europe is clearly a very important source of investment into Brazil. It's a natural economic partner to a certain extent with very strong cultural links. Brazil, of course, has very significant immigrant populations, not just from Spain and Portugal, but also from Italy, Germany, and Eastern Europe. So there are lots of links there. But as you'll appreciate, Europe is a continent composed of really quite distinctive national economies, and that is reflected in the different target sectors that European investors are looking at. We have seen lots of investment over a number of years from German companies into automotive and manufacturing, for example, metalwork to a certain extent, whereas the UK, lots of investment into oil and gas, but also financial and professional services. France in agribusiness, Spain in infrastructure, which really gives a wide and diverse base to European investment in Brazil. And now we're seeing certain sectors with particularly high activity levels. There is a wave of consolidation going on in Brazilian healthcare, for example, and foreign interest, particularly in medical devices and diagnostics subsectors. The Brazilian renewables sector is booming, particularly solar. Brazil's favorable sunny weather and the reduction in costs of solar panels have made that very competitive. And there's also been a surge in project development activity intended to take advantage of subsidies before they are phased out this year for larger projects anyway. And M&A is a natural part of the development of renewables projects. Generally, smaller developers will deal with the acquisition of land rights and permits and then sell out to more capitalized companies for the capital-intensive construction phase, who in turn often sell on to infrastructure funds and other long-term investors for the lower risk operational phase. And then at the same time, completely different. We're seeing lots of oil and gas in M&A. Lots of M&A in oil and gas. International oil companies are increasingly focused on energy transition. And so they're seeking to exit more polluting and lower margin assets. But as always, there's a new breed now of private equity-backed independent that see a buyer's market for those types of assets and are seeking to take advantage of that. So there's a lot of assets changing hands in oil and gas. And finally, as you'd expect, there's lots of M&A in technology, particularly fintech, where consolidation seems to be occurring at an international level, particularly. Lots of Brazilian fintech companies and Latin American fintech companies have built a Latin American platform, and now certainly a lot of North American companies, but also European and Asian are looking at those Latin American footprints in their global expansion plans. So Brazil is a very active M&A market again, but as an investor, what should you expect from doing business here? Now I have got a couple of minutes left probably, and this could be the subject of a webinar in itself. So I'm really just gonna give you a few headline thoughts here. In my experience, traditional Brazilian practice is quite different from that you'd find in Anglo-Saxon jurisdictions. But English and New York practice is having an increasing influence, particularly in higher value and cross-border deals. Those Anglo-Saxon or Anglo-Saxon practice, as you may know, tends to explicitly limit the liability of sellers in quite a heavy way, with long and detailed lists of limitations on warranties, for example. Traditionally, Brazilian SPAs have been shorter form, and some of the more obvious provisions in our English SPAs are sort of supplemented by the Brazilian doctrine of good faith, which of course we don't have the benefit of. For example, if a buyer is seeking to claim under a warranty that it's aware of, a breach of warranty that it's aware of, that may not be expressly excluded in a Brazilian SPA because they would struggle to claim for it anyway, but certainly would be in an English one. And one thing here is that you should be wary of simply changing the governing law of an Anglo-Saxon SPA to Brazil or vice versa. A Brazilian SPA is unlikely to hold up well under English law without those general principles behind it. And there can be issues with translation. Often the word indenizar is translated as indemnity, for example, but that doesn't mean indemnity in the English sense of the word. Some other things to bear in mind. I think it's important to be careful during negotiations and an MOU and heads of terms stage, because the Brazilian good faith duty also applies at a pre-contractual level. So you could unwittingly take on liabilities. The volatility of the Brazilian real can make valuation difficult. So earn-out mechanisms can be useful. In terms of due diligence, labor and tax are everybody's bugbear in Brazil. They do present risks. It's important to have that looked at properly. And compliance remains a sensitive area with all of the recent or relatively recent corruption scandals. Also in Brazil, family businesses make up a much larger part of the economy than you would expect in Europe or the US. So often you're dealing with individual sellers, and you need to think about how that impacts the deal. What are the dynamics among family members? What happens in case of death or divorce or bankruptcy? How are you going to limit liability for warranties between the various individuals? And how are you going to enforce warranty claims against Brazilian individuals? If you're relying on Brazilian courts, then that is going to be a very lengthy process. Generally, arbitration is going to be a better option here, I think. But you'll still need to enforce through the courts. So it's important to think about security, deferred consideration, or potentially warranty and indemnity cover. Although it should be said that that is still not widely used in Brazil, and it is relatively expensive, which explains the limited uptake. So as I say, they were just a few sort of headline points which really just scratched the surface, but hopefully that's given you a little flavor. I know that my colleagues at Focaccia Amaral will be picking up on some more specific points. So back to you, Paolo.
Thanks, Ted. It's always a pleasure hearing from CMS, one of the leading global law firms. Really, really nice to hear from you. And now I'll call my colleague, Renata Homem de Melo. She's the M&A partner of FAS in Brazil.
Hi, everyone. Thanks, Talarico, for the introduction. I will talk today about the legal aspects for investing in Brazil. And to get it easier, I will divide my contribution in 4 parts that are why invest in Brazil, how to invest in Brazil, the step-by-step process of investing, and future perspectives for investments in Brazil. So why invest in Brazil? Brazil is one of the largest countries in terms of territory, population, and also consumer markets. And it cannot be ignored when looking for business investments and also international expansion. And besides that, as Ted already mentioned, the devaluation of the Brazilian real against international currencies makes the valuation of assets in Brazil more attractive to foreign investors. Even though the impacts of COVID-19 could be felt in M&A activity last year, M&A activity is reaching new highs this year. So when deciding for M&A investment in Brazil, it's important to understand some local particularities in order to anticipate any difficult or any conflict. Ted mentioned some, but I can also mention the culture aspect and the language, and also the lack of better levels of corporate governance in family business, especially in family business, as Ted told also, and our tax system and our labor law. Because of these obstacles, organic growth is more challenging. A natural way or an easy way to overcome those hurdles is to acquire an operational company already established here in Brazil. But how to invest in Brazil? There are some ways that are used to perform the investments. One is the direct investment. That means that an individual or a legal entity acquires an operational company here in Brazil, or they incorporate a company in Brazil, and such company acquires the operational one. Another alternative is to execute a convertible note, that it's the mútuo conversível that we say in Portuguese, which is an instrument of debt that converts into equity. In other words, a convertible note is a loan made from investors, but instead of being paid back, the investor can be repaid in equity in the company. It is considered a safer way to invest, because in case company does not succeed, the investor may choose not to convert the credit into equity choose not to become partner of the company, of the startup, and consequently will not be held liable for the company liabilities. But before closing the deal, it's really important and recommendable to structure the investment considering the tax point of view. This is especially relevant in terms of how the funding will be made and also to take advantage of any tax benefits or treats, and also thinking the remittance of profits or the remittance of the funds when exiting the company. To give an idea of taxation, Juliana will expand on these tax aspects later. Moving on to the step-by-step process of investment, I have to say that the process itself in Brazil, it will generally follow most of M&A process throughout the world, although there are some differences on the clauses as Ted mentioned. So after analyzing the market and find a potential target company, the parties will execute the non-disclosure agreement to get information from the target and to prepare the evaluation of the company. When the evaluation is finalized, a letter of intent will be executed addressing the main terms of that transaction. And then the due diligence process phase starts. If the investor's intention is to invest in a startup company, and depending on the size and stage of such company, usually the due diligence phase can be simplified, being more a fast track one, focusing in specific areas depending on the business, because we know that timing is everything on those transactions. And in order to be like a quick due diligence, sometimes it's common to analyze the background of the founders, the intellectual property, especially if we are talking about a fintech, and privacy and data management practices. In Brazil, it's important to know that softwares have protection similar to the author rights, and such assets are held by whom develop it, unless they are assigned to the company. So when doing the due diligence, make sure you are buying the core technology and the full rights of it. When the due diligence phase is concluded and the investor gives the green light, the go ahead, it starts the negotiation of the stock purchase agreement and the shareholders agreement in case it is a partial acquisition. To mention some of the terms that will be included in the SPA, I can say the representations and warranties, the indemnification mechanisms for liabilities, the non-compete clause, and sometimes an earn-out payment. Ted also mentioned that. And it's established when buyer and seller do not agree on the valuation of the company, meaning that the seller expects some higher valuation or a higher payment for the purchase price. And the seller believes that the company has a strong growth potential. And then the buyer may accept the valuation proposed by the seller as long as the company really achieves some certain performance targets that has to be predetermined on the stock purchase agreement. The earn-out clause needs to be really discussed with caution during the negotiation in order to avoid conflict in the future when it's time to confirm the achievement of the performance targets. And in relation to the shareholders agreement, besides the usual terms that will rule the relationship among the shareholders, I can also mention some important terms to include some important conditions, like the investors' veto rights, that basically to include a list with some matters that would be mandatory to have the affirmative vote of the investors, rule for granting a stock option plan in case the investor understands that granting a stock option is important to give incentives to some key people, a lock-up period for the sellers to make sure they will not leave the company within a certain period, and also exit mechanisms for the investors, and also a liquidation preference rule for the investor. The liquidation preference clause establishes how much money the investor will receive and in which order. It's the famous, the last money in is the first money out. Concerning futures perspectives for investments in Brazil, our government has been working to develop rules to modernize the business environment in Brazil. And it has already established some rules, such as the setup of companies in an expedited way. And recently, our government approved the legal framework for startups, which will come in force next month in September. The main goal of this new legislation is to modernize the country's business environment, to boost innovation, and to allow Brazil to receive more investments. Such law sets out a legal definition for startups to classify which company is a startup or not. Basically, according to the legal framework, a startup is a company with an annual gross income of no more than 16 million reais that uses innovative business models to create products and services. And this innovation, it is stated in its articles of association, and is no more than 10 years old. Such framework also established angel investors protection standards, that startups may receive investment from individuals or legal entities which may or may not include equity interest. That Brazil will now have an experimental regulatory environment for startups operating markets such as fintechs and health techs, which means that companies may launch new experimental products and services with less bureaucracy and control. It's known as the regulatory sandbox. In addition to the new regulations applicable to startups, such new law also simplified some provisions of the corporation law, of the Brazilian corporation law. Corporations with annual revenues of less than 78 million reais are now allowed to publish their corporate documents and also their financial statements electronically, unlike the previous obligation of publishing it on newspapers, which will reduce expenses significantly. A corporation now may have only one officer, changing the rule previously enforced that required the appointment of at least 2 officers per company. And also that Securities Exchange Commission will create a new set of rules to facilitate the access of small companies to capital markets. Some people criticize the legal framework for startups because relevant issues, especially with tax nature and also rules to stock options, to grant stock options, have not been addressed by this new law. Despite that, it's visible that the legal framework represents an important step for the sector. In conclusion, I can say that M&A process is time-consuming, but if it is possible to mention what are important factors to conclude a good transaction, I would say to create an agile deal team, proceed with careful research, pay attention to detail that might get overlooked, and especially to have emotional intelligence. Well, today I share with you an overview of the main factors that may concern foreign investors in doing investments in Brazil. Now I will leave with Juliana that will discuss tax aspects relevant for foreign investors and doing foreign investments here in Brazil. Thanks.
Thanks, Renata. What a deep analysis in such a short time. Many thanks. And now I call Juliana. She's the tax partner of FAS Advogados in Brazil. Please, Juliana, go ahead.
Thank you, Talarico. Good morning, everyone. So, as Talarico mentioned, I am the tax partner on tax planning and transactions. And very honestly, I have been working in this field for more than 20 years. And if there is one statement that I can make regarding the tax aspects of an M&A and investments in Brazil, is that the tax element is really important. It is important not only because of the liabilities that may be huge and really impact the decision of investing in Brazil, but also because there are opportunities in Brazil. There are tax planning available that may really improve your position, improve the position of the investment in Brazil. However, opportunities, they take time, they take planning. And in my experience, it's very common to see investors deciding and negotiating all the main elements of the M&A transaction and investment before thinking about the tax portion of the business. This is really an error because the planning ahead allows the company, allows the investor to avoid liabilities and also to build a structure that will mitigate risks of challenges in the future, while at the same time enjoying tax benefits that are available in Brazil for investments. In addition to that, it is important to understand that there is no correct planning or one-fits-all solution in terms of tax planning. Tax planning will vary a lot depending on the seller, on the buyer, and on the type of investment. So for the type of investment, as an example, the foreign investor may decide to invest in a publicly held corporation in Brazil. And for that, there are exemptions on capital gains, there are exemptions on dividend distribution. However, in order to enjoy such exemption, the investment, for instance, has to be carried out by means of a special regulatory procedure and system. And in addition to that, it has to have, the investor has to be located or domiciled in a regular tax jurisdiction. Otherwise, the tax exemption on capital gains, for instance, will not be available. So this is something to plan ahead because you might decide where should be your holding for the investment beforehand, but it takes time. It takes time sometimes to set up a company. It takes time to fund an acquisition. So the decisions should be made ahead. I mentioned public investment. However, although we know the IPOs have been booming in Brazil, if you compare to the past, most of the companies still are privately held in Brazil. So several opportunities are located in the private held companies. So the decision for a non-resident to invest in a privately held company from a tax perspective has to be very well planned. First of all, of course, because of the liabilities, and structuring can very effectively at least mitigate the risk of tax succession. There is one side. But as for opportunities, which is the subject at hand here today, we do have, for instance, the possibility of goodwill amortization, which means that the premium that is paid on the acquisition of the shares, the premium that is above the fair value of the assets, the fair value of the target assets, will become amortizable for tax purpose, or it will reduce corporate income taxes in the same amount, provided that legal requirements are fulfilled. And the legal requirements, for the most important legal requirement, for instance, would be to set up or to have a legal entity in Brazil as the acquisition buyer, so as the acquisition company. If it is a new investment in Brazil, set up a company will be important. Setting up a company will not be the only requirement, because of course, tax planning always comes along with some level of risk. Tax authorities are always looking at to see, to confirm, to verify if there is substance in the steps that were carried out in order to enjoy the tax incentive available to this transaction. So sometimes setting up a legal entity one day before acquiring the shares of the target entity in Brazil will not be recommendable because it will certainly increase your risks. So if you, for instance, have another legal entity in Brazil already operational, for sure that should be the way to go in terms of acquisition vehicle in order to avoid this risk. If you don't, then we would try to, as much as possible, include or to have more substance in the funding activities, in the negotiation activities for your acquisition vehicle in Brazil, so that this company is well established and is not considered only a shell company with the only purpose of enjoying tax benefits. And this is only an example because, of course, tax planning, it can take hours explaining all the elements that we have to take into account in tax planning, but this is one of the most important. So I'm making sure to illustrate this discussion with this example. But I was saying, so we have public investments, we have private investments, and we also have greenfield investments. So for instance, if a company decides to come to Brazil and start from the scratch, building a plant, the decision on the region where it will be located in Brazil might define tax incentives on the federal, state, and municipal levels, as well as on the sector the industry is located. So some sectors are benefited for certain tax incentives. So greenfield investments also may or should be subject to tax planning in order to obtain or to boost the tax efficiency of the project as a whole. Talking about a little bit the differences between sellers and buyers that may affect the tax planning. So for a non-resident buyer, what are the most important issues for the tax planning? Besides liabilities, I would say possibility of goodwill amortization, dividends distribution, and exit strategy. These are the three main elements. Possibility of goodwill amortization, we already discussed it, so it may be important to set up a legal entity or to have presence in Brazil, take advantage of that. Dividends distribution, we currently have exemption on dividends distribution regardless of the jurisdiction where the beneficiary is located. However, and here I will already touch a possible change in the future, there is a bill of law in the Congress under discussion. It is expected to be voted still this year that introduces the withholding income tax over dividends distribution at a rate of 20%, regardless of the jurisdiction where the beneficiary is located. This is really important because in the past, if you were to ask me, is there any major difference in being located in jurisdiction A or jurisdiction B in terms of dividends? I would say no. The holding jurisdiction, you may as well decide the best holding jurisdiction for your business because for Brazilian purpose, you will not be impacted in terms of dividends. If this change is really implemented, that response will certainly change because tax treaties may reduce the withholding income tax that is levied on dividends distribution or even provide for the non-incidence or the exemption or on the withholding income tax. So now, from now on, the tax planning will also involve the place or the jurisdiction where the buyer should be located in order to improve the position of the dividends distribution. So dividends distribution, goodwill amortization, and exit strategy. What is exit strategy? Mainly we are talking here about capital gains, right? So capital gains are taxed for non-resident entities in regular jurisdictions, regular tax jurisdictions, at variable rates from 15% to 22.5%, depending on the amount. So 30 amounts of gains of 30 million and over, they will be taxed at 22.5%. However, capital gains of any amounts that are earned by non-residents located in low tax jurisdictions, those will be taxed at 25%. So this is already something to take into account, right? Because upon the sale or upon the exit of your investment in Brazil, it would be interesting not to be located in a low tax jurisdiction for a non-resident investor. In addition to that, and then already talking a little bit about the seller, which will also be one of the drivers of the tax planning, especially for the non-resident. If the non-resident is buying shares of a Brazilian entity from a non-resident seller, there is imposition of withholding income tax obligation over the capital gains of the seller, which means that the buyer is the one responsible for collecting the tax related to the capital gains of the seller, even if the buyer does not have presence in Brazil. So it will appoint a legal representative in Brazil that will be the party to collect, calculate, and respond to the tax authorities in the future if there is any error or even to prove that there was really the collection of the tax. So this is really important for the buyers, for the non-resident buyers to be aware of. I had already experience with buyers that were acquiring investment in Brazil, but the investment in Brazil was held by a holding entity abroad, and the sellers, the condition for the sellers to sell the Brazilian entity was to sell the holding entity together with the Brazilian entity, which means that no capital gains would be due in Brazil. The conclusion and the result of that was that 4 or 5 years after the transaction, the acquirer was subject to a tax assessment because the tax authorities understood that the withholding obligation was not fulfilled because they acquired a holding entity abroad that had, in the opinion of the tax authorities, no substance and was only meant to avoid capital gains. So this is an important part of the planning for the buyer as well, even though this is a cost for the seller. Talking a little bit about the seller and trying to make a link with startups and fintechs. We may have individuals in Brazil, we may have non-residents in regular jurisdictions or low tax jurisdictions, and we may have legal entities located in Brazil. The rates, they vary. So for a legal entity in Brazil, capital gains will be taxed as profits at 34%. For non-residents, 15 to 22, or 25 for low tax jurisdictions, and to individuals, also 15 to 22.5. The difference if you are buying from an individual is that there is no withholding obligation because it is a Brazilian individual. Any Brazilian company or individual will have the obligation to pay the withholding or the income tax due over capital gains, and this responsibility is not transferred to the buyer. So, and then linking with the startups, one experience that we have with this field is that these are most companies they started very small and they have very flexible policies, and they are growing very fast, and they are adapting to this new growth, to this new size of business. And when they are selling participation to large groups, to foreign investors, it is very common to have either convertible notes or share-for-share transactions where the non-resident or the investor in Brazil will not have a cash out element or will not purchase shares, but will, for instance, grant shares or exchange shares with the individuals in order to integrate the business with an existing business in Brazil. The issue with that is that in most cases, there will be no cash out for the seller. However, seller will receive participation in a share-for-share transaction, for instance, and will be, or in most cases, or the tax authorities' main interpretation is that there is capital gain already in a share-for-share transaction for the individuals and for any seller in Brazil. So they would, in principle, have to collect income tax over the capital gains at this point. However, they don't have liquidity because the transaction was carried out as a share-for-share. So that has been a hurdle in the transaction that we are trying to be very creative, trying to offer structures that are a mix of purchase and sale and cash-in investments in order to allow liquidity and allow the integration of the buyer and seller in some sort of investment in Brazil. So this is also part of the tax planning, because in the end of the day, it's the tax aspect of the transaction that will represent a hurdle or an obstacle in the negotiation process. So tax will influence not only in the tax efficiency as a whole, in the value of the investment, but also in the negotiation aspects of the deal. So wrapping up and trying to summarize, watch outs for the future: tax reform, planning holding entities and dividends taxation. Watch out for a closer look of the tax authorities to tax planning. They are already trying to narrow the opportunities. They have tried to include in the tax reform the possibility of taxation of indirect capital gains in Brazil for non-residents, which is not currently on the legislation. That provision was excluded from the Bill of Law already upon negotiation with the congressman. Although it shows that the tax authorities already are looking into it. So we have to think about it. And I would say the main takeout for the tax matter in acquisitions would be planning ahead. I'm very optimistic. I think it is very complex, it's true, the tax system in Brazil, but I think there are, on the other hand, many opportunities there. But you do have to do your homework and plan ahead to be in your best position, either to enjoy benefits or to defend yourself in case of a tax risk that allows that may come up because of a tax planning. So that's basically it.
Thanks, Juliana. Juliana, is always, tax always a complex matter when it comes to Brazilian jurisdiction, as it may seem, but well done, well spoken. And now I would like to call Milton Sequino. He's the partner of BTN Partners and give us his contribution. Please, Milton. Turn on your microphone, please. Thanks.
All right. No, thanks for inviting me to this event, Paulo. It's really a pleasure to be here among this group of experts. So I was chosen to basically talk about investment opportunities in tech. Let me just share my screen, but meanwhile, I can give you a little bit of a context around tech investments in Brazil. Can you guys see my screen? Hello?
Yes, we can see your screen,
right.
Hamilton, go ahead.
All right, good. So in terms of tech investments in Brazil, right? Overall, I think, it's not a Brazilian phenomena, but tech, as you guys know, have been very resilient, right? To the pandemic, the lockdowns, the politics, the local politics, trade tensions, fiscal and monetary policies of the different governments. So it has been, let's say, a very counter-cyclical sector for investors to put money in. In particular, right, I think investors, or tech investors in particular, they're seeing two things in technology, right? Two or three things in technology. One, they're perceiving tech as a safe harbor, right? Kind of a defensive play almost in investing, in investment opportunities. The other point that I would like to make is, given the low yield government corporate bonds around the world, as Ted mentioned, I think investors are seeing technology as an alternative, right, to value stocks as well as low yield bonds around the world. In particular in Brazil, I would say tech investors are also showing a lot of interest because of the attractive growth prospects of an emerging market and lower multiples, right, as compared to other more developed technology markets. In addition to, I think Ted mentioned that too as well, is the favorable exchange rate that we're seeing in the past year in terms of US dollar real exchange rate. So I have a very quick couple of slides here that I'd like to basically provide some color around tech investments in Brazil. So let's focus on 2021, right? 2021, we're seeing in the first half of 2021 already like record levels in terms of venture capital, as well as IPOs in the Brazilian market. Venture capital, basically Brazilian startups, right, have raised around $5 billion, more than $5 billion in over 300 deals. But this was very concentrated in the so-called unicorns, right? So around $4 billion out of the 5, concentrating in 11 deals. Now, IPOs have been more fragmented. There was a flood of IPOs in the technology sector in B3, as well as 2 listed firms in IPOs in the US, and that raised about $4 billion from foreign as well as local investors. So that's one angle. The second angle is that basically you're seeing in Brazil, right, as other panelists mentioned, you're seeing a lot of investments and bumped up valuations in technology startups, right? So Brazil, I think, is one of the countries with emerging markets, at least with the most number of unicorns. So we have about 16 at the latest count, with a combined market cap of valuation, right, of about $63 billion. The third point that I'd like to make is in the public markets, right, not in the private markets pointed out in the previous slide. In the public markets have also been, investors have also been rewarded by their investments in public markets. So Brazil has around 35, or by no means this is an exhaustive list, but I count at least 35 tech-listed firms with over $100 billion valuation. Obviously, this is a very, very tiny fraction, right? If you look at technology, the representation of technology sector in S&P 500, or even in China, right? So this is, we still have a long way to go, but it's a start. And finally, I would say that there's a very growing, fast-growing pool of foreign venture capital, private equity, as well as strategic investors, either in the form of corporate VCs or strategic investors, companies acquiring or making investments in Brazilian startups or technology companies. So you have, for example, in venture capital, you have essentially a mix of the Silicon Valley stalwarts, right? The big guys in Silicon Valley establishing presence in Brazil, like Andreessen Horowitz, Bessemer, Insight Partners, Redpoint, Sequoia, all with some level of presence in Brazil, some more active than others. And then in venture capital, in the venture capital sub-pool, you also have a lot of fintech focused investors, right? These guys do fintech investments around the world on a global basis, and Brazil has become part of their footprint. So we have folks like QED, Kona, and Ribbit, a large investor in fintech. If you go to private equity, you see essentially two archetypes, right, of investors here too. You have the generalist private equity funds. They're going deeper into tech, seeing the opportunity. So you have Advent International, Berkshire Hathaway. You have like the Temasek and GIC, right, from Singapore, going deeper into tech. And then the second type of private equity that you see here, making investments in Brazil, are very large tech funds, right? Hybrids between venture capital and private equity, given their large check sizes, right? So you have Go2 Management, Dragoneer, DST Global, SoftBank, one of the most active investors in technology in Brazil, and Tiger Global as well. And then finally, in the corporate venture pool, right, you see a mix of two types of investors, right? You have the technology incumbents, folks like Google Ventures, Microsoft with M12, their venture arm, Mercado Libre with Melifund, Qualcomm Ventures. And then the second type of corporate venture investor that you see is financial services firms and fintechs themselves, right? So financial services firms like FIS, you have Visa Ventures, right? And then fintech companies like Ant Financial and Tencent. To close, right, this session, I just would like to point out that it is, I believe this will, Brazil Tech will remain attractive, right, to foreign investors, and given the strong deal flow in the market, right? So in Brazil, we have a couple of favorable things, right, to continue seeing these foreign investment opportunities. One is there's a very large pool, there's a very large ecosystem of startups, right? Obviously, this number doesn't represent the real investment opportunities. It's much more concentrated on fewer players, but there's an ecosystem very rich. And some of them will reach the stage in which foreign investors can write checks to continue funding the growth of the startups. The second point is, I think a lot of the panelists here highlighted fintech, right, as one of the main sources or destinations of foreign capital investments in Brazil. My belief is that, yes, they will continue to a certain extent, especially in terms of consolidation in the fintech sector, but you're going to see a lot of rotation as well, meaning some of this money, smart money, right, going to other sectors like health tech, ed tech, ag tech, being agriculture being one of the main drivers of growth in Brazil, and then insurtech as well. So in all these in all these segments, you also see a large ecosystem, right, of startups, and that will feed into future opportunities for Brazilian investors, for foreign investors. Number three is there's a very strong pipeline, right, of future IPOs, right? Not only local IPOs in B3, but also NASDAQ or NYSE IPOs. And this will be fed by the unicorns that you saw in one of the slides, and others that will reach that point. There will be also opportunities for foreign investors based on follow-on offerings of already listed firms in the US or in Brazil. And then the two last points essentially are related. One is pertaining to the increasing M&A activity, right, of large cap tech companies or incumbents. So this contributed to opportunities to foreign investors in two ways, right? One is like in order to fuel these M&A activities, these companies will need to raise more money, more funds from investors. And then number two, it helps investors in creating liquidity, right? So that they can recycle their capital to new investors, right? So they can exit from some of their older investments in older funds, and then they can recycle that capital into new investments in earlier stage. Right? So I guess that concludes my thoughts around Brazil tech opportunities for foreign investors. And I guess we're going to open up for Q&A. And I guess we can also provide this material if you guys are interested in receiving these couple of slides.
For sure, Milton. Thank you for your contribution. And the material is very good. For sure, you can send that to all the participants. And now I would like to call Marcio Francischini. Marcio is the Senior International Business Development Officer and works closely to the Brazilian Consulate and Brazilian Foreign Office, and is a specialist in international trade. Please, Marcio, go ahead.
Thank you, Paulo. It's a pleasure. First of all, I'd like to thank for the invitation. It's a true pleasure and a privilege to be here with you guys today talking about investments in Brazil. Straight to what brings us here, investments in Brazil, and in this particular case, the ongoing presence of Canadian investments in Brazil and why Brazil is so attractive to Canadians on an ongoing basis. First of all, it's I guess worth pointing that Canadians are not only top investors in Brazil these days, but they're very traditional ones. Canadian presence in investments in Brazil in infrastructure in particular dates back to 1889 with the creation of Light, the energy company based in Rio. The company actually still alive and kicking. It went on to become Braskem at one point, and today it's Brookfield Investment, probably the best known Canadian company in Brazil today by everyone in every segment of infrastructure, from highways to energy to farming, agriculture, to energy to sanitation. So it's a very traditional presence, and interesting enough, Brazil continues to be a very attractive market for Canadian investments. So what makes Brazil attractive today for Canadians? No doubt, the country's relative size within Latin American economy is a very strong attractive. It is the largest market, largest consumer market, as mentioned by everyone before me, a very good pool of labor, so on and so forth. Also important at this point in time is the extensive privatization program of the federal government and of some states. São Paulo is one of them, but you get states like Piauí in the Northeast with a very strong PPP program. This privatization indicates a very positive forecast for an increased opening of the market, whether in logistics, energy, weather, water transportation, or else. So this is something that Canadian investors have in fact anticipated years back, and they have been focusing on infrastructure investments in Brazil before pretty much anybody else. In fact, even before local companies were investing in infrastructure for lack of funds or capacity, Canadian investors were already looking at opportunities. The examples of the appetite of Canadian investors in Brazilian infrastructure market, one good example is the Ontario Teachers Pension Plan recent acquisition of control of the company Evolts, which operates 6 electric power transmission lines in Brazil, as well as the Canadian pension plan CPP taking control of Igua Saneamento at the end of April this year, which ended up buying one of the blocks of SEDAI, the Rio de Janeiro Water Company. I guess it's also worth pointing that before this acquisition from out of OTPP, the Ontario Teachers Pension Plan, they were already present in the electricity segment in Brazil through the Finnish. They bought the capital of Finnish distributor Caruna, and so the power transmission segment was and remains a particular attractive segment amongst other reasons because of the preponderance of renewable energy sources, as previously mentioned, and that's a segment that Canadian investors are always tagging and following and maintaining the interest. The investment, the auction of SEDAI in Rio de Janeiro, Block 2, also was a landmark for Canadian investment in Brazil. 2 Canadian investment funds were part of the winning bid for SEDAI, and that we believe reflects the high demand for water treatment and basic sanitation services in Brazil. And that segment for us will continue to offer a very good opportunity. It's a segment that offer consistent and stable payback with the changes brought by the new landmark sanitation, and so it is an area that Canadian investors will certainly continue to look. And again, we're talking about nearly 1,000 municipalities throughout the country that are expected to privatize or seek concessionaires in the next few years. So again, you can expect Canadian investors to be looking and active in this segment. To finish, I'm trying to be very succinct and brief just before lunch, but overall, the common perception of Canadian investors is that Brazil continues to be a very good place for long-term investments. That said, investors maintain a cautious optimism due to the slow adoption of some of the promised and much needed structural reforms, the Brazil fiscal, social. More recently, there is a certain level of instability, and the political instability here reflects in areas like environment. So how, would there be a safe and legal environment to invest in a long-term project if the environmental law changes? So the political instability is also reflected in other areas that otherwise would not be impacted by this area. In closing, it is pretty much safe to say that Brazil continues to be attractive and that Canadian investors are expected to remain very active in Brazil in coming years, if nothing else changed. So one cent of comments from the Canadian perspective. Back to you, Paulo.
Thank you, Marcio. Your Canadian views are very enlightening to all of us. And unfortunately, our time is up. We'd like to thank for all the participants. We are sorry for the initial delay due to technical problems. As I said at the beginning, I'm here at New York City to assist our clients in United States, Canada, and Mexico. And if you need something, FAS is here to assist you. And thank you all and have a nice day.
Thank you.
Thank you very much.
Thanks, everyone. Bye.
Thanks, everyone. Bye.
Bye-bye.
Bye.